to chapter 1, trading styles. In this chapter, we are going to understand what is your strength as a trader. Now, if you see and follow the game of cricket, you see that there are 3 different formats. Test match, one-day cricket, popularly known as ODI, and T20, that is 2020. And if you see any national team of any country playing, you will notice one thing. A test side playing 11 won't be the exact same as a 2020 playing 11. The question is why? Is one batsman not good for another? We are not comparing who is the best batsman here or who is the best bowler. What the playing 11 is selected by the coach, captain and selectors is based on which player is suited best for that particular format. Welcome to chapter 2, view building. Before we take any action in our trade setup, we need to build our own view of where we see the price momentum moving. We get a bullish view or a bearish view or a neutral view. There are only 3 possible directions the price can move: upside, downside and sideways. And the action is only triggered on the upside and downside. If a price is moving sideways, we have a neutral view. Only buy and sell are the triggers we act upon in our trade setup. So let us understand how we can build a bearish or bullish view by looking at the technical charts. Let's take an example of, say, DV's Lab. DV's Laboratories traded stock Indian. Welcome to chapter 3, trading strategies. In this chapter, we will learn simple strategies in different trading styles so you can pick one out of your comfort zone and use that to make money for yourself. Let us start with a trend following strategy. For this strategy, we are going to be using a Heikin-Ashi chart. So when we go here, you have the option, you can see Heikin-Ashi. It's another type of a candlestick chart itself where you will see red and green candles. Let's take an example of one of my favorite stocks, Polyplex. As we understand, a trend following trader wants to enter and stay maximum of the time in the trend, which is the primary trend. So this kind of strategy is more useful for people who want to stay invested in that setup for at least a few months. Welcome to chapter 4, risk management. In this chapter, we will learn how you can use simple but effective tools to not only protect your capital but ensure that you are on the winning side of the markets, no matter how many losses you make and no matter in which direction the market goes. So starting with, we will understand how you define your capital. Your trading capital needs to be different than your investing capital. Now this is very important because usually what happens when we take a short-term trade and it hits a stop loss, it becomes very difficult for us to accept that loss and move or exit out of that trade. This ends up with us becoming long-term investor not by choice but by force. By having that loss-making trade sitting in your portfolio, it just becomes a long-term investment out of time, but not the business choice, which is fundamental analysis, which we use for long-term investing.